Hello, Seasonal Vantage Insiders, Alex here. So today's date, it is the 26th of August 2024. As I'm doing this video, the time now is 3:55 p.m. That is about 4 p.m. Okay, so before I get into today's watch list and all this, right, and my outlook, just to let you know that today, as usual, Monday, uh, evening there will be my usual live stream. So please, for more information, please head over to the live stream tonight at 10:30 p.m. for more insights and outlook. Okay, and also there, okay, during the live stream, okay, I will be announcing that there will be a seasonality webinar, okay, this coming Thursday. So if you are already in SVI, okay, you don't have to attend the webinar. Basically, I'm just, sharing with the general public, for those who haven't joined SVI, what is seasonality, what is SVI all about, and then, I will encourage them to join the SVI. So if you're already inside, okay, you can choose not to go lah, okay, so maybe don't waste your time, okay, because, all the things you already know already, okay, so don't have to join, all right. So yeah, and let's kickstart, okay, for today's session. So for today's session, I'll go through the main thing, the index, and also the watch list, okay, and some of the stocks that I'm watching out also. But okay, let's head over to the index first, okay. So you can see that the S&P 500 make a V-shaped recovery, okay, ever since I think 2 or 3 weeks ago, when I first mentioned that when there was a sell-off on this on this so-called Black Monday over there, right? Okay, the market actually have a very steep sell-off, and then that was where the VIX actually spiked to more than 3 standard deviation, and after that the market actually recovered pretty nicely. So to be really honest, I wasn't expecting a V-shaped recovery. So there are 4 scenarios, and of course the last scenario that I think it will happen is actually a V-shaped recovery. So can you see that the market do what the most unexpected, at least for me, okay, and do a V-shaped recovery, okay. Yeah, all right, so this is the S&P futures, and of course, during the weekend, in fact, on Friday, the Fed Chairman Jerome Powell also said that the time has come, that the Fed will actually to reduce the interest rate, okay, and to stimulate the economy and such, and so very likely, okay, this coming September, the Fed will reduce the interest rate, okay. For more and such regarding all this, right, please tune in to my public Facebook Live and YouTube live stream tonight at 10:30 p.m. So today I'll just go through the usual stuff, okay, the outlook for the indices and also the watch list as well. So you can see that this is the S&P 500 cash index, this SPX cash index. All right, so the zero gamma level, it is at about 5,005 level right now, okay, which means that if price can hover above 5,005, okay, I think the chance that the market can continue to go higher, or there's less volatility, okay. So if price really go below 5,005, then we can expect maybe more selling to come, okay, more volatility to come. But as of now, okay, the zero gamma level, it is at 5,005. So of course, all this can change tonight when the market open. So, but as of now, okay, it is at about 5,005 level, okay, the zero gamma level, okay. And of course, for the last 1 or 2 weeks or so, okay, the market actually went higher while I actually personally shorted some stocks. So in any case, okay, I think the results also not so good, at least for the past 1 or 2 weeks, okay. But you need to remember that for the past prior many weeks, the result has been pretty good, or rather I say that pretty fantastic now, okay. So maybe for some of the newer members, right, okay, this might be, or those who joined recently, okay, there might be some losses because, okay, for the past 1 or 2 weeks, I actually shortlist all those potential short selling stocks, okay. So let's head over to the members area right now, okay. So you can see over here the latest, okay, I mentioned it is on the August of 20 stock in focus, Spire and Service Corp, Okay, so personally, I actually shorted Service Corp as well. So you can see that Kelvin, okay, also shorted it, but it went up instead. So personally, okay, I get stop out from SCI. So prior to that, okay, the last Monday, I mentioned after that a few stocks, right? Okay, a few stocks, ARE and TPH, but all these I did not enter because at that point in time, okay, there were no trigger, so then it continued to go higher, and then I actually posted another one in focus. This is where there was a trigger. So personally, okay, I shorted Service Corp, okay, and yeah, and all this previously, okay, I also lost on the Bank of California and GDA as well. But okay, there are also a few stocks that I am still holding on. So like previously I mentioned about the Hologix, right? HOLX, okay? I am still holding on to it, okay? So it still continue to go lower. So I'm still holding on to it. And the reward to risk ratio right now, it is about 1R for me. Okay, which means that if I risk $1,000, okay, my profit right now is $1,000 profit also, okay, plus 1K. So this is Hologix at that I am still entering. And previously, I also mentioned that the Cisco Corp, okay, yeah, I exited somewhere around here. So it's slightly less than 1R. But okay, for those who actually held on to it, okay, I think by now you should have, if you like happen to close somewhere near the open there, you should have at least about 1R or so, profit 1R or so. Okay, and of course previously the NDAQ Nasdaq, okay, it also rarely go higher. So for those who have not exited, I think it is a good time to maybe have some uh, exit and take some profit off the table. So there are some winners, there are some losers, okay? And maybe for the past 1 or 2 weeks, there have been more losers, okay? Maybe you're not used to it, okay? But just to let you know first, okay? I think that I shared previously in my webinars and some of my videos, right, okay? Typically whenever I trade, right, okay, let's ignore all this first. So I prefer, okay, to have a 1.5 R reward to risk ratio, which means that if I risk $1,000, okay, my profit, okay, should be 1,500. Okay, if I risk $1,000, I hit 1,005 profit, then I will take profit. Okay, so which means this is the 1.5 R. All right, so which means that if I traded 10 trades, if I have 10 trades, okay, all right, if I have 10 trades, okay, and I have 5 loser, okay, I lost 5, okay, which means that it is, minus 5R. Every time I lost is minus 1R kind of, okay? All right, so if I win 5, okay, technically it is at 1.5R, okay, times 5 lah. So it's actually 7.5R, correct? 1.5 times 5, okay, is 7.5R, correct? So which means that, okay, for 10 trades, okay, so for 10 trades, you can only win 50% of the time, okay, 50% of time. So you trade 10 trades, okay, you win 5, you lose 5. So your hit rate, it is only 50%. Not exactly the best, but only 50%. But because your reward to risk ratio is 1.5R, okay, so you lose minus 5R. If you win, it's 1.5R. So it times 5 winners equal to 7.5R. So you net, okay, it is still equal to 2.5R profit. So can you see that, okay, it is not the amount, not the hit rate that is crucial. The crucial thing, okay, it is the, the R, okay, the reward to risk ratio. So as I mentioned, right, it is good that you can get above 1R, okay, for all your profits. Okay, let's say, for example, sometimes the market doesn't just give you the necessary profit. Doesn't mean that you want to take profit at that level, you take profit at that level. So let's say maybe you can't get 1.5R, that you only get 1.2R instead. Okay, 1.2R, it is actually very achievable, 1.2R. So which means that if you risk $1,000, okay, you get back $1,200 profit. Clear? So if you risk $1,000, your profit is 1,200. If you exited and take profit, is 1,200. So which means that, okay, again, let's say if you did 10 trades, okay, 50% were losers, okay, which means that you lost 5 once again is minus 5R. Okay, so you win 5, so instead, okay, it is 1.2R times 5. So it's actually 6R, right? 1.2R times 5 is equal to 6R. So your net, okay, it is still 1R. So at the end of the day, you still do not lose money, even though you only win 50% of the time. Okay? So technically, by right, okay, for the past 1 or 2 weeks, maybe break even, but you shouldn't lose much money also. Because if you base on this, okay, the winners, you make more, the losers, you only lose 1R. Can? All right. So again, all right, position sizing, it is also important. You cannot just anyhow thumb what kind of, you want to put $10,000 on this trade, then you put 10,000. You want to put $100,000 on this trade, then you put $100,000. So to me personally, right, you need to position size your account. So let's say, for example, okay, you have a $100,000 account, okay. So typically, I actually recommend 1 to 5% risk lah, okay, which means that if you risk 1%, okay, you risk only $1,000 per trade. All right, if you risk 5%, you risk $5,000 per trade. So your position size, okay. You need to know that, okay, from 1,000 to 5,000, it is actually a 500% increase. Correct, okay. So you risk 1,000, 1% to 5%. Typically, I risk 1 to 2% only. I don't risk a lot in terms of percentage. Okay, all right. So which means now, okay, let's say for example, typically I use 2% risk. Okay, so if I want 100,000 account, right? If you risk 2% each time, okay, which means that you risk $2,000. Okay, so let's say for example you have 5 trades concurrently, okay, and those 5 trades you lose all, okay, which means 2%, okay, times 5 is 10%, so you lose 10%. Which means that if you risk 2% and you lose all 5, okay, your capital, your portfolio is instantly down 10%. Okay, it's instantly down 10%. So if you increase it to 5%, okay, all right, and you lose all 5 concurrently, okay, all the 5 trade you did all are losing trade, okay, which means that you immediately is down 25% already. So can you afford to lose 25% or not? Okay, so if you cannot afford your portfolio to be down 25%, okay, then you don't risk too much, okay, because there's a very high chance that you're very unlucky, you're very sway, okay, there's a chance that you can lose all the 5 trades, okay. So if lose 5% times 5 is really down 25%. So typically, okay, I try to use lesser, okay, 1 to 2%, okay, at most 3%, okay. All right, so 2% times 5 is 10% down. All right, so this means that you need to position size, okay, properly, and have a good reward to risk ratio. Anything above 1 is good. So if you have 1.5R, okay, or even 1.2R profit only, at the end of the day, if your winning trade is just 50%, okay, at the end of the day, net, you are still positive. Your account size is still positive. Your profit, it is still positive. Okay, all right. So I think that's all for today. So I mean that for those who actually maybe lost some money, okay, for the past 1 or 2 weeks, okay, I apologize. Okay, I also have some drawdown, but I think that's fine. That's also previously covered by the rest of the winning trades. But these are the times that you experience drawdown along the way. It is inevitable. So it is, I think right now it's a bit similar to the January period when I was expecting that the market to go down, but it didn't go down and it continued to go higher. So in January, that time there was some drawdown, but after that it was pretty good until right now again. Okay, I was expecting so-called a correction, but it did not. Market continue to go higher. Okay, so it tells me that it is always not really good to be against the trend. Okay, against the trend, when especially during an election year, when the market it is usually very bullish. So it pays not to be so bearish on the US market, But nevertheless, at this moment in time, okay, I also just want to let you know that I am still a bit wary of the market. Okay, yeah, even though I'm bullish maybe until end of the year, but I am still wary right now. So for the S&P 500 now, there is actually a star reversal signal right now for the S&P 500 and also the Nasdaq. I think Nasdaq also. For the Russell 2000, I think by today there will be a star reversal signal. You can see that for the Russell 2000 also hitting the CPR over there. So as of now, I won't be aggressively going long. Okay, you can choose to go long if you want to, but I won't really go aggressively. So at this moment in time, I can tell you frankly that I'm in a so-called not so sure state where if you long not so good also, if you short also not so good also. Okay, all right. So I might just stay out of the market. Okay, and see how it goes first. Okay, all right. And but okay let's head over to the watch list first, okay, and see some of the data for this coming week. So for this week, it is 25th of August to the 1st of September. Okay, September, the data starts from the 3rd lah. So there's still until the 1st. Okay, so it is from 25th of August until the end of the month, 30th of August over there. So this is the bearish data. You see that, okay, bearish data, okay, bearish data, it is over here. So in fact, based on the seasonal data, there are a lot more bearish data for this period, okay, compared to the bullish data. So you can go through that, okay. Those that caught my attention again, it is still the gold miners. I can see that there's gold miners over there. There is some, I think, I thought I saw some gold over there. Yeah, okay, at the bottom, okay, until towards the end of the month, also gold shares, okay. All right, so previously I mentioned about the GDX, right? The GDX, right? So when I first mentioned 1 week ago, market, I was expecting price to actually come down lower, okay, but it did not continue to go higher. So no action, it is being done over there, okay. No action is being done until actually about 22nd, okay, over there, okay. I actually shorted lah, not exactly shorted the gold miners, directly, but I actually use options to express my trade. So you can see over there. So this is what I have with Tasty Trade. So I actually sell a vertical options. Okay, I sold core vertical options on gold futures. And this is not GLD ETF, and this is gold futures. So you can see that I sold 2 contracts. Okay, the stocks and the futures options is different. Okay, it doesn't mean that for stocks or ETF, you buy 1 contract, it is actually 100 shares. Okay, so for gold futures, it is actually 1 contract of gold futures, 2 contract of gold futures. Okay, all right. So you can see that this is a vertical call. You can see that I sold at 2620. I bought higher at 2360. So this is a vertical call options. Okay, each contract net about 1.30 credit, $1.30 credit. So 2 contracts is 260. Okay, credit. All right. And yeah, so this is what I've done. So this is the gold futures. Okay, all right. But as of now, it continue to go higher. So 2620, it is at about here. Okay, you can see that because of gold futures, it is a futures options. I can sell pretty high up. Okay, so which means that there's a few scenario. If price continue to just grind high all the way, okay, then I have to so-called exit and cut my losses. Okay, I don't really roll my options nowadays. Okay, but again, if you don't know what I'm talking about, never mind. Okay, just know that I actually so-called shorted gold using options to express my my bearishness. And for gold, price can don't move, price can go down, price can move out a little bit, okay, then I can still make money, because you can see that this is actually until the end of the month on November 25th. So it's about 30, exactly about 30 DTE left, days to expiry. I think maybe some of you don't trade options, so I think I'm ahead of myself here, okay? But these are the things that I'm looking at the goal. But again, I forget to put on the bullish one. Yeah, these are the bullish ones. So once again, the bullish one, there are also quite a bit, okay? I won't go through every single one of them, but you can see that the bullish stocks, okay, not so much, okay. So all in all, if you I walk through, not I walk through, as in I filter through some of these stock and do some screening. The only one that actually caught my attention, these only two for now, and they are not the best of the best, okay. But I just share with you what I found, what I screened, okay. If you are going to go for there's a long setup. It is actually GLNG. This is Golar LNG Limited. So you know that the name is LNG. So it's liquefied, okay, natural gas, okay, LNG. All right. So if you go for the bullish data, GLNG over there. So this is here, okay. All right, from 30th of August at the end of the month until 16th of September, for the past 10 years, during this favorable date, it typically went higher under energy. This is Golar, GLNG. So if you take at the Golar over there, so you can see that overall it is in a pretty nice uptrend, but after that it will kind of be overextended. Then there was a sharp sell-off, okay, and then price revert back to the CPR, get resisted, and then come back down again. And then you can see that on Friday there was a wash and rinse trigger over there, okay. You can see that on Thursday price closed lower than the prior day low. So the prior day low over here, it is 32.62. 32.62, okay. And then on Friday, price closed higher than the wash line at 32.62, okay. So the favorable period is end of the year, end of the month, until maybe mid-September. So there's a chance that, let's see whether the price can continue to go higher. But do take note that as of now, the CPR pivot point, it is over here. So there's a good chance that if price hit the CPR level at about 34, okay, we might see some so-called reaction again at the same area again at about 34, okay, 34.12. All right, so this is Golar, a bullish seasonal stock over there. And the other one that caught my attention, it is actually QGen, QGEN. So it's I don't know how you pronounce that, Tiagen NV, okay. So this is actually a health stocks, okay. So overall you can see that it is in a big consolidation. Overall, previously it was down if you're looking at the longer term period, but for the past few months or so, or at least the start of the year, it has been kind of a ranging in a very big range. And you can see that on Friday there was a wash and rinse setup also. Can you see that on a Monday over there, this is where price closed higher than the prior day high. So here, okay, the prior day high was actually 46.71. 46.71. Okay, and then price, this is where it fell on a Friday and closed below the wash line at 46.71. Okay, so the QGen, the bearish data here. Okay, let's search QGen. here. Okay, it is from 27th of August to 22nd of October. This was a very big window period. For the past 10 years, 90% of time it is down during this period. Okay, so for QGen, there was a wash and rinse trigger setup. Okay, so let's see if the price can continue to go down lower. All right, so personally, okay, I am not so keen to short now lah. Okay, if you ask me, okay, because you can see from the seasonal data from the equity clock, typically from the late August until maybe mid of September, for the past 20 years, the market tends to go higher. And of course, during the election year, market tends to go higher during this month also, in August also. So, okay, it is always not wise to go against the trend. So I tried, okay, we tried, okay, at least for me, I tried, okay, it doesn't work out so nicely. Okay, so do be wary if you wanted to short, okay, but this is some of the stocks that you want to be more careful if you wanted to short, because overall the market is still in the uptrend. Okay, there's a likelihood that if the market continue to go higher, there's a good chance that after it come down, it can continue to go higher. So be more careful if you wanted to short, but I think most likely I will not short this stock. We'll see how it goes. Okay, for GRNG, okay, we shall see also. But all in all, I'm more of a status quo. I not so keen to so-called initiate any new position. Okay, maybe for the early start of the week. Okay, but as of now, these are the only two stocks that have a trigger. Okay, all right. So yeah, and for more information, right, please tune in to my live stream tonight. I'll talk more about interest rate, and such and such. So as usual, see you tonight at 10:30 p.m. With that, thanks so much, and bye bye.